Hello and welcome. Yesterday, in the first half of the day, the euro-dollar pair was trading in a narrow sideways range with a low volatility. In the second half of the day, bulls made several attempts to break above 1.1333 but failed. A false breakout at this level led to a strong sell signal. As a result, the euro plummeted by more than 40 pips, thus forming a good entry point for long position at the level of 1.1291. As for fundamental factors, today's macroeconomic calendar includes data on the M3 measure of money supplied in private sector credit from the euro area. However, this report will hardly have a severe impact on the foreign exchange market. Later, the United States will release statistics on goods, trade balance, and wholesale inventories. This data may increase market volatility and affect the dynamics of the euro-dollar pair. Given subdued trading activity ahead of the New Year holidays, the quotes will most likely continue trading within a sideways channel limited by the levels of 1.1291 and 1.1333. Today, bears are expected to attempt to test to the 1.1291 mark, dragging the price down so that it could break below it. The level of 1.1313 acts as the middle of the channel full of moving averages. Thus, I recommend focusing on this mark. A false breakout of 1.1313 will create a sell signal. In this case, the euro is likely to slide to 1.1291 and probably break below it, approaching the area of 1.1288 and 1.1286. This will enable bulls to open long position and regain control over 1.1313, the middle of the channel. If the price consolidates above this level or tests it from the top down, a buy signal will be created. The euro will return to 1.1333. From this mark, it will be possible to go short in case of a false breakout. Alternatively, short position can be considered on the rebound from the resistance level of 1.1358, with a view to catching an intraday correction of 10-50 pips. Speaking of the British pound, yesterday the currency hit a new one-month high. The price consolidated at 1.3445 and tested that level from the top down. However, after a 15 pip rise, the pound sterling came under pressure again and returned to 1.3417, the lower border of the channel. Nevertheless, traders should not rush into long position as market players could lock in profits. I think it would be a wise decision to consider short position in the event of a false breakout of 1.3446. Besides, it will be possible to go short in the price breakthrough and fixes below 1.3417. All this will increase pressure on the British pound, which will most likely enter a correction followed by a return to 1.3389. A false breakout at this level will create a strong buy signal. Long position on rebound can be considered only from the levels of 1.3368 and 1.3344. If bulls are able to protect 1.34 and 17, and the price breaks through and consolidates above 1.3446, traders will have a chance of going long with a view to reaching 1.3472. From this mark, I recommend open short position on the rebound, counting on intraday correction of 20-25 pips. Well, that's all. If you have any questions, please post them in the comments below. Good luck.